Hello, and thank you for joining us here on the Clarity Core. Today, we'll be exploring the topic new. The 3 best ETFs to buy and hold forever, simply explained. Everyone wants to build wealth, but most people make investing far more complicated than it needs to be. They chase the newest stock trend, panic during market drops, and jump from one hot tip to another, all while the people who actually get rich are the ones doing something much simpler. They buy great investments, and they hold them. That's it. No day trading, no guessing, no stress. And that's the power of ETFs, or exchange-traded funds. The simplest, safest, and most reliable way for everyday people to build long-term wealth. But not all ETFs are created equal. In this video, we're going to break down the 3 best ETFs to buy and hold forever. Funds so strong, diversified, and time-tested that you can literally build your entire financial future around them. By the end, you'll know why these ETFs outperform most active investors, what makes them long-term wealth builders, and how to use them to reach financial freedom, even if you're starting small. Let's get started. What is an ETF, and why they're so powerful? Before we dive into the 3 ETFs, let's make sure we're on the same page. An ETF, exchange-traded fund, is like a basket of investments. It can hold hundreds or even thousands of different stocks or bonds inside one simple fund. When you buy one share of an ETF, you instantly own a small piece of everything inside it. That means instant diversification, low fees, and no need to pick individual winners. For example, instead of buying Apple, Microsoft, Amazon, and 497 other companies separately, you can just buy an S&P 500 ETF and automatically own them all. Instead of guessing which country or sector will do best, you can buy a Total Market ETF and own everything. ETFs are one of the greatest inventions in modern investing. They allow regular people, without millions of dollars or Wall Street connections, to invest like the world's wealthiest individuals and institutions. And here's the best part. If you choose the right ETFs and simply hold them for decades, you'll likely outperform 90% of active investors who constantly try to time the market. That's not an exaggeration. It's a statistical fact. ETF number 1. The S&P 500, the foundation of American wealth. Let's start with the foundation. The ETF that every long-term investor should own, the S&P 500 ETF. This fund tracks the 500 largest publicly traded companies in the United States. Companies like Apple, Microsoft, Amazon, Google, and Johnson & Johnson. When you invest in an S&P 500 ETF, you're not betting on one company. You're betting on American business as a whole. And over time, that's been one of the best bets anyone could make. The numbers don't lie historically. The S&P 500 has returned an average of 10% per year over the past century. That means if you invested just $10,000 and left it alone for 40 years, it would grow to more than $450,000 thanks to compound growth. And that's without picking a single stock. This is why the S&P 500 is considered the core building block for almost every long-term investor, including billionaires and major institutions. Even Warren Buffett, arguably the greatest investor of all time, recommends that most people just buy an S&P 500 ETF and hold it forever. He once said, "A low-cost S&P 500 index fund will outperform most investors over time." And he's absolutely right. Top S&P 500 ETFs to consider. If you want to invest in this index, here are the top 3 ETFs that track it. Vanguard S&P 500 ETF, VOO. Extremely low fees, 0.03%. Huge liquidity, perfect for long-term investors. SPDR S&P 500 ETF, SPY. The original and most traded ETF in the world. iShares Core S&P 500 ETF, IVV. Identical performance, also very low cost. All 3 follow the exact same index, so you can't really go wrong. The difference between them is minimal. It mostly comes down to personal preference or which one your brokerage offers. The key point. The S&P 500 ETF gives you diversification across every major industry in America. Tech, healthcare, finance, consumer goods, energy, all in one simple fund. It's your set-it-and-forget-it investment. ETF number 2. The total stock market. Own the entire U.S. economy. If the S&P 500 gives you the biggest companies, the total stock market ETF takes it a step further. It gives you everything. This fund includes not just the 500 giants, but thousands of mid-size and small-cap companies too. That means you're investing in the entire U.S. economy, from Apple and Google to small companies you've never heard of that could become the next big success story. Why it matters. Small and mid-cap stocks often grow faster than large companies because they have more room to expand. By including them in your portfolio, you get a balance of stability from big companies and growth potential from smaller ones. It's like owning both the established champions and the up-and-coming stars. Top total market ETFs to buy and hold Vanguard. Total Stock Market ETF, VTI, tracks over 3,500 U.S. companies, one of the most popular ETFs in history. Schwab U.S. Broad Market ETF, SCHB. Similar to VTI, slightly different weighting, ultra-low fee. iShares Core S&P Total U.S. Stock Market ETF, ITOT. Another excellent choice with wide diversification. All three of these ETFs give you broad exposure to the U.S. economy. If the S&P 500 is the main course of your investing meal, the Total Market ETF is the entire buffet. You get a taste of everything. Performance over time. Over the long term, Total Market ETFs have performed very similarly to the S&P 500 because large-cap companies dominate both. But during bull markets, they sometimes outperform slightly due to the extra growth from smaller companies. That's why many investors use VTI, Vanguard Total Market ETF, as their one-and-done portfolio. Just one ETF that covers all bases. You could literally build your entire retirement plan around it. ETF number 3, the international market. Global diversification. Now that we've covered the U.S., let's look beyond America's borders. Because while the U.S. dominates global markets, the rest of the world still makes up nearly 40% of global GDP. That means if you only invest in the U.S., you're missing out on massive opportunities in Europe, Asia, and emerging economies. That's where international ETFs come in. Why you need global exposure. Different regions grow at different times. When the U.S. slows down, Asia or Europe might be booming, and vice versa. Owning international ETFs balances your portfolio and protects you from being tied to just one country's economy. It's like having investments working for you in multiple time zones. Top international ETFs to hold forever. Vanguard. Total International Stock ETF, VXUS. Over 7,000 companies across 40-plus countries, including both developed and emerging markets. iShares MSCI AQY ex-US ETF, ACWX, covers global stocks excluding the U.S., focusing on Europe and Asia. Schwab International Equity ETF, SCHF, low-cost and well-diversified international exposure. Each of these ETFs gives you instant access to companies like Nestlé, Toyota, Samsung, LVMH, and many more global giants. Long-term benefits. While international markets can be slower in certain periods, they add diversification and currency protection. If the dollar weakens, your international holdings often rise in value, and historically, global markets tend to rotate, meaning that over decades, international exposure helps smooth out volatility and improve returns. The key idea: don't put 100% of your wealth in one country, even if it's America. A 70-30 or 80-20 mix, U.S. ETFs plus international ETF, is ideal for long-term investors. The power of holding forever. Now, let's talk about the magic word, forever. Why does buy and hold forever work so well? Because markets go up, eventually. Yes, they crash. Yes, they dip. But over the long run, the market always trends higher. Let's look at history. The Great Depression? Recovered. The 1970s inflation crisis? Recovered. The 2008 financial meltdown? Recovered. The 2020 pandemic crash? Recovered in record time. The market rewards time in the market, not timing the market. When you buy broad ETFs like these and simply hold, reinvesting your dividends, you harness the full power of compound growth. As Albert Einstein supposedly said, compound interest is the eighth wonder of the world. The math of millionaires. Let's do some quick math. If you invest $500 per month into an ETF that grows at an average of 8% per year, in 10 years, you'd have about $91,000. In 20 years, you'd have $274,000. In 30 years, you'd have over $745,000. In 40 years, over $1.5 million. That's the power of simple, consistent investing. You don't need to pick the next Apple. You don't need insider information. You just need time, patience, and discipline. The simple 3 ETF portfolio. Now let's bring it all together. If you want a simple, powerful, and nearly bulletproof portfolio, here's what it can look like. 1 VOO or VTI, US Core, 70% of your portfolio. 2 VXUS or SCHF, International Diversification, 20%. 3 BND or AGG, Bond ETF for stability, 10%. And there you go. That's it. This 3 ETF portfolio gives you exposure to the entire world economy, built-in risk balance, growth, stability, and long-term compounding. You don't need 20 different ETFs or 100 stocks. You just need consistency and conviction. The psychology of holding. Here's where most investors fail. Not in choosing ETFs, but in sticking with them. Every few years, something scary happens. A crash, a recession, bad headlines. People panic, sell at the bottom, and swear off investing forever. Then the market recovers, hits new highs, and they buy back in. Too late. If you can learn to do nothing when others panic, you'll outperform 90% of investors. The real secret isn't finding the next big stock. It's staying invested in great ones you already own. Why ETFs beat most investors. Studies have shown that over 15-year periods, 90 and 95% of actively managed funds underperform simple index ETFs. Why? Because they trade too often, pay higher fees, and make emotional decisions. ETFs, on the other hand, are rules-based. They don't get scared, they don't overreact, they just follow the market. And the longer you hold them, the more the odds tilt in your favor. Tax efficiency and low fees. Another big advantage of ETFs? They're cheap. Really cheap. Most top ETFs charge between 0.03% and 0.10% annually. Compare that to mutual funds, which often charge 1% or more. That difference may seem small, but over decades, it adds up to tens or hundreds of thousands of dollars in savings. ETFs are also tax efficient. They rarely generate capital gains until you sell, meaning less tax drag on your growth. Low cost, low taxes, high compounding. That's how wealth is built. The only 2 things you control. At the end of the day, there are only 2 things you truly control in investing. Your costs, keep them low. Your behavior, stay consistent. Everything else, market cycles, news, politics, is noise. If you can master those 2 things and own these 3 ETFs, you'll do just fine. ETFs to avoid. Just a quick warning. Not all ETFs are safe or simple. Some ETFs focus on niche sectors like cannabis, AI, or meme stocks. Others use leverage, meaning they borrow money to amplify returns and losses. These are not buy and hold forever ETFs. They're speculative, risky, and short-term. Stick with broad, diversified, low-cost index ETFs, the ones we covered here. They might seem boring, but boring is beautiful in investing. Final thoughts. Building wealth doesn't have to be complicated. You don't need luck, timing, or secret information. You just need the right ETFs, time, consistency, and patience. If you focus on those 4 things, the market will do the heavy lifting for you. So whether you're just getting started or optimizing your portfolio, remember this. The best investment strategy is the one you can stick to forever. And if you choose the right ETFs, like the 3 in this video, you're setting yourself up for a lifetime of financial freedom. If you found this video helpful, don't forget to hit like, subscribe, and turn on notifications for more simple investing guides every week. This is the Clarity Core, helping you understand money, investing, and freedom one video at a time.